Hello guys, Dimnex here. Welcome to this video. So today I'm going to talk about how to really trade the follow-ups of pretty much all of the recent IPOs this month. There is some tricks I want to share with you guys. So let's get into the video. So first one, let's talk about PWM and pretty much all of the tickers that we talked about last week. There is about 5 of them today. First one will be PWM. We've seen this one went from 4 to 31. It was traded on 1 million float. And the reason why I didn't short this in the very front side is whenever you are shorting an IPO and the ticker was crowded, and that means it's trading more than 20 million shares, or it rotates more than 15 times of its float throughout the day. Right here traded more than 15 million shares, right here traded more than 15 million shares. The reason why I didn't really short PWM, first of all, it was easy to short. Second, it's hard to find the risk since the consolidation range is a little bit too wide, which we talked about in the last video. And going in for yesterday's and today, there is 2 opportunities that actually you can catch. The first one is the following bounce short up in here. We have little resistance in the 20s, and shorting around 20 is not that bad. I took a short around 19 to 20-ish, covered around 15. The reason why I covered around 15 is if you take a look at yesterday's close, which is around 12, the range is between 12 to 13. So typically you want to cover around 20% above the neutralized area, which is around 12. I chose around 15 because that's 50% from the top, and they had the support at first. It had its support that was formed in the very initial of the spike, and so I think I made 50k around there. And then going into today, I took a short after it failed around 26.5 because whenever a low flow is going parabolic and it's on a decent amount of volume, never try to guess the top. Always wait for some type of pullback or consolidations before you add into size. So for today, the correct action or sizing is supposed to be partial around 26 because it's at the consolidation. Then main size supposed to be the rejection on the bounce up around here, so 23.9. Then add a little bit more on 22, then cover into yesterday's close, which is around 18. The total volume traded about 9.2 million, so maximum size you can size in a sticker is around 100k, 90k shares. Highest volume is 300k, so yeah, around 60k to 90k shares. The range itself is not too great, so I don't recommend sizing into the max size. And you can see that every ticker that went up significantly recently always produced some type of bounce. So that's PWM. And going into today, HCTI a couple days ago, heading right into the resistance around 6, traded over 18 million shares against the 30 million resistance. This one's also around 1.5 million float. Took a little bit short around, I think it's around 6 because it opened around 6. Wanted to sizing to 660-ish. Cover around 4. That was an easy short for HCTI. It was a decent bounce short. Those 2 bounce short are a little bit different. PWM is more of multi-day bounce short. It created a decent amount of range testing high of the resistance. So this is worth a short. And HCTI, this one you cannot short into the second day. So when the ticker hammered into resistance and faded all the way back down, majority of the time, the second day, if the ticker tends to spike again, it's not a short anymore. But if it holds its gain and didn't drop, it can be a short in the second day. So this is the difference between PWM and HCTI. Now we have another one, which is GTTC that happened last week, and the major resistance is around 7. So right now we're at 4. If it goes to 7, we will be up about 70%, 80%-ish. That will be something that's worth a short. Consolidations around 7, resistance around 20 million. So if it trades more than 40 million shares when it's heading to the resistance, then it's probably not a short anymore. The resistance volume is kind of low, around 20 million, so be very careful when GTTC bounce back. But I noticed that pretty much for all the biotechs, it's worth it to trade if it's on very fresh IPO. But if it have 2 years of history and traded some type of volume before, more than 10 million, then it's not worth it to use the average statistics under normal gap up short. Make sure to track your biotech statistics because there's a difference between IPOs and non-IPOs. That would be the 3 major play for recently. I would say they're not too bad, pretty predictable. The volume is stable as well. And they're all micro floats, so it doesn't trade that much volume. But I'm very curious to see that in the next couple months, when the market picks up again and we're heading into a couple hundred million volume in one day, we'll see how the statistics performs. But for now, shorting into resistance IPOs works pretty well. So, all right, guys, that'll be it for this video. Thank you very much for watching. If you have any questions, make sure to leave a comment below, and don't forget to click the like button and subscribe. I'll see you guys in the next one.